Blockchain technology, redefining the financial world. A leading innovation in the financial sector, blockchain technology is touted as a game changer that will reduce financial frauds, ensure quick and safe transactions, and monitor and lessen risks within the financial system worldwide. Considering the many benefits that it offers, blockchain technology is gaining acceptance. Though we are yet to see its widespread adoption, it is already being used by some of the financial institutions like Visa, Barclays plc, and American Express among others. While Visa has invested in one of the blockchain developers and uses this technology for international business-to-business payments, Barclays has conducted extensive research into how blockchain technology can benefit finance and tested smart contracts to buy and sell derivatives. Here are some of the ways in which blockchain technology is altering the financial sector. Faster transactions. With the emergence of Bitcoin, blockchain technology has enabled movement of finances from one point to another without the need of a central governing body. As a result, it has made it easy to achieve faster and cost-effective transactions. It settles transactions in seconds and at a cost less than 1 cent. Considering its cost-effectiveness, it is touted to save banks $27 billion on cross-border transactions by the end of another decade. One of the companies that uses blockchain is Ripple, that makes use of this technology for RippleNet, a payment network that processes transactions with seconds at a fraction of a cost. The faster transactions enabled by blockchain technology will eventually make it easy for lenders to lend loans and vendors to receive capital. Even the stock exchanges can settle purchases and sales easily. Secure transactions. The financial sector is always under the threat of frauds, hacking activities, and cybercrimes. Digital payments always carry the risk of the user's information being stolen when the payment is processed from one point to another. Here, blockchain technology has come handy by using the cryptographic algorithms to process and store transactions blocks. When used across the financial sector, blockchain technology will help lessen the risk of hacking while processing transactions, thus adding trust to the financial ecosystem. Also, it makes transfers more traceable than in traditional banking setup. Self-executing contracts. The launch of Ethereum was a major building block in the blockchain technology, as it was the first blockchain to have contracts that self-execute when conditions that are set are met. Contracts are a major part of the financial sector, and companies spend a lot of time to properly execute them. With the self-executing contracts in place, it reduces time and makes the process more efficient for the companies. For example, an insurance company can easily use smart contracts to speed up claims filed by clients. When a client files claims, it can be automatically reviewed by the codes stored in the blockchain. If the claim is valid, the smart contract will process it further, thus making it easy to settle claims and saving time. Customer database. Every financial company goes through an identity verification process with all their clients to prevent frauds. Though a time-consuming process, it cannot be negated while doing business. An alternative approach to saving time and money is to store customer data on blockchain that other financial companies can also easily access. So, when a company does the Know Your Customer (KYC) process with a new client, it can store the data on blockchain. Another financial company can use the same data for the same client rather than doing the KYC all over again. This will save hassle and time not only for the company but also the client. Inalterable records. As the records stored in blocks cannot be altered, blockchain technology is a safe way to keep records and send reports to regulatory agencies. More transparency. By adopting blockchain technology, the company's activities are listed on the public ledger. It adds more transparency and uncovers discrepancies and exposes frauds, thus giving way to problem-solving that eventually reduce risks in the financial sector. Blockchain challenges. While this technology offers many advantages, there are many challenges in implementing it in the financial sector. It has certain drawbacks, because of which the adoption is lagging. For this technology to be effective, it needs widespread acceptance. While one bank may want to use it to speed up transactions and self-execute contracts, it can only do it if the other bank dealing with it also is open to using blockchain technology. As there are many blockchains, there is a lack of interoperability between them, thus making them incapable of communicating with one another. To solve this, it is imperative that different blockchains should work together to focus on solutions that ensure interoperability. Also, businesses should come together and form blockchain working groups and find solutions to similar problems that may benefit everyone collaboratively. As there is a short supply of skilled blockchain developers, many small financial companies may be reluctant to spend money to change their entire system and switch to blockchain technology. Even if the current solutions are available free of cost, a lot of investment goes in hiring skilled engineers that specialize in blockchain technology. If the company doesn't have the funds to spend on it, it is better to put off blockchain introduction. Since blockchain is relatively new and has not come under the radar of the government bodies, in times to come, the government is likely to formulate policies and law that will affect companies using this technology, thus discouraging its usage currently. Blockchain investment. From big to small, there are multiple companies using blockchain methods. As this technology is expected to gain more acceptance, anyone who wants to invest in blockchain can do it by investing in companies that have successfully tapped into this technology. Blockchain stocks have become popular investment opportunities. One example of such a company is International Business Machines Corporation, IBM, that is focused on the development of blockchain technology to boost its business. The use of blockchain has turned the cryptocurrency market into trillions of dollars. As blockchains were first used in digital currencies in finance, another way to invest in this is by buying cryptocurrency-oriented stocks that are blockchain investments. For instance, MicroStrategy Incorporated, MSTR, holds more than 105,000 bitcoins that are valued at more than $5 billion. Another such company is Square Incorporated, SQ, that has invested in Bitcoin. The company is soon expected to launch a decentralized financial platform that will focus on Bitcoin applications. Investing in such companies allows one to get exposure to blockchain without directly being affected by the volatility and uncertainty associated with the cryptocurrencies. Despite the challenges on the way of widespread implementation of blockchain technology, it is set to become a major part of the financial sector in years to come.